Now let's look at the question number 6. Nehara withdrew 20,000 from the business for her private use. What has happened here? The owner has withdrawn 20,000 cash from the business. What is the impact? What is the dual impact? First of all, find out the asset side. Since Nehara has taken 20,000 cash will reduce by 20,000. Who has taken the cash? The owner. Nehara has taken 20,000. So therefore, the business liability towards the owner will reduce because she has withdrawn cash. So therefore, the business, whatever the income earned and the capital invested, all will have to be paid back to the owner. Now here she has taken 20,000, so therefore the equity will reduce by, we call it drawings, cash drawings, by 20,000. The business liability towards the equity owner will reduce by 20,000. Now the 7th question, the transaction. Purchased equipment worth 100,000. The business has purchased an equipment worth 100,000. So what is the impact? What is the dual impact? First, on the asset side, since you have purchased, there is a cash outflow. Cash will reduce. So cash reduced by 100,000. And what is the impact on the liability? Is there any impact on the liability? There is nothing. But on the asset side, your one asset has reduced by 100,000, which is the cash, and by giving cash you have acquired another asset, that is the equipment. So equipment is an asset, it will increase by 100,000. So as a result of that, the net impact will be 0. The net impact is 0, therefore there is no impact on the liability side. So therefore the equation will tally. Transaction number 8. Paid 5,000 of the telephone bill of the month. So there again there is an expense. Telephone bill is an expense. So business has paid a telephone bill of 5,000. So when you pay 5,000 telephone expenses, what is the impact on the accounting equation? The dual impact. On the asset side, cash will reduce by 5,000, and since it's an expense, expenses will have to be borne by the owner. Since the business has paid 5,000 expenses, the amount to be paid towards the equity owner will reduce by, this is the telephone bill expenses, by 5,000. Next one. Nehara invested an additional capital of 50,000. So there is an additional capital invested by Nehara, 50,000. Very simple. Dual impact. What is the dual impact? Asset will increase and the liability towards the owner will increase. So business receives cash 50,000, and also business has a liability towards the equity owner. So therefore the equity will increase by 50,000. The last transaction is settled 20,000 of the bank loan. So initially the company has obtained a bank loan of 200,000. Now the company earned some income. From the income it has to repay its bank loan. Now settle 20,000. So since there is a settlement, there is a cash outflow. The asset will reduce by 20,000. You are settling, and the business liability towards the bank will also reduce, because initially you had a liability of 200,000. Now you have paid 20,000. So therefore the liability of the bank loan will reduce by 20,000. Now finally what you have to do is you just take the total of asset sides and total of the liability side. So in fact the liability side consists of equity and the liability. You take the total of equity, total of liability, it should tally. Finally, when you take the closing balances, having recorded all these transactions, it will be as follows. The equipment balance will be 100,000, fixed deposit 100,000, cash 555,000. So therefore the total asset side will be 755,000. On the other side, the equity side and the liability, equity 575,000, the bank loan 180,000. So when you add up these two, it will be 755,000. So therefore, having recorded all the transactions, your asset side total value will be 755,000. On the equity and liability side, it will be 755,000, which means the equation tallies. I will be sharing more videos on accounting. Keep watching my videos and subscribe to my channel. Thanks for watching.